Hello, this is Compound Interest Stock Guy, and today we're going to be talking about natural gas, and we're going to be talking about natural gas companies in the space, and we're going to read some articles from Motley Fool and a few other different articles, and then we're going to go through the different companies and the kind of fact sheet when I look on investing.com and TMX. So stay tuned. If you're new to the channel, please subscribe. Helps my channel grow, and I appreciate it. I also want to disclose I'm not a financial advisor. This is just for entertainment information purposes. Do not buy or sell stock based on anything I chat about in this video. And please give me a thumbs up. That helps my channel. And yeah, so let's get into this. So today was a very sunny day, and I spent some time playing frisbee golf. You know, when it's the springtime, you guys just got to get outside and enjoy the weather. You know, what other kind of hobbies you can do, just have fun. Yeah, I mean, so this is the companies that the Motley Fool talks about. So this is a Russian company, so it's on the OTC as well, so I wouldn't personally buy it, but you never know. I mean, it's obviously a big player. It's the biggest player in total. It's kind of interesting actually, because Norilsk is a humongous nickel player, and platinum and palladium, and they aren't listed on the NASDAQ or the NYSE. They're listed on the OTC. So you got to think that just a conspiracy, because this company as well is on the OTC as well, so that maybe the USA companies are saying, F you, we don't want you to raise capital on the NYSE or the NASDAQ, so they put them on the OTC and don't let them uplist to the NASDAQ or the NYSE. So I find that really interesting. But again, they're doing about 4 times the amount per year, and this is in 2017, the report. But I'm sure they're still a huge player. I haven't done like 10 hours of research into all this stuff. I've done a few hours, and I'm just sharing you the information that I'm getting. But I just looking at natural gas today, and the price might be on the up and up. So I just started to think about doing research, and this is what I'm sharing. So Royal Dutch Shell, and there's 2 tickers, RDS-A and RDS-B, and they do about the second most in cubic feet per year. So they do 3.9 trillion cubic feet in natural gas, which is amazing. And ExxonMobil, XOM, does 3.7 trillion, and PetroChina, PTR, does 3.4 trillion cubic feet, and BP does 2.8 trillion cubic feet. So yeah, this is an interesting article. I'm just going to skim through it. Exxon is a leader in the US gas market, and it comes in Texas. Texas is a big oil and natural gas hub. Yeah, PetroChina is the biggest in China for natural gas companies. And yeah, they're the second largest oil producer. And 92% of its gas output and 83.8% of its oil production comes from its home country. So it's saying it's a risk and reward. And BP is growing into a gas giant. BP, like Exxon and Shell, is a diversified global oil and gas company. However, while its oil business tends to garner more attention, the company has quietly become a leader in the natural gas space. So yeah, I'm looking at natural gas, so BP. But the companies that I talk about, I'm kind of looking more at lower share count, but I also want the biggest players as well. So yeah. So here it's ranking the countries by proven reserves. Russia has 47 million. No, it's billion um, meters squared. Meters, yeah, cubed. And Iran has 33.7 billion, and Qatar has 24 billion, and US has 15.48 billion, and Saudi Arabia has 8.619, and Turkmenistan has 7.5, and United Arab Emirates has 6, and Venezuela has 5.7, and Nigeria has 5.47, and China has 5.4, and Algeria has 4.5, and Iraq has 3.8, and Indonesia has 2.8, and Mozambique has 2.8, and Kazakhstan has 2.4, and Egypt has 2.18, and Canada only has 2.0, and Australia has 1.9. So yeah, it's interesting. And you get to Malaysia has 1.1, and other countries. And Syria doesn't have very much. They have 2.41, like 241. And Barbados only has 0.142. So it's kind of interesting. And Canada, so this it's talking about 10 producers. Peyto Exploration, they produce 20% of Canada's natural gas and is tired of waiting for the government and foreign major to make bolder moves into LNG. If more LNG projects are built, the opening of this industry will drive Canadian natural gas prices significantly higher. So, and in Canada, ECA on the TSX and NYSE, with 55% of its production being natural gas. So they're doing 6 times since 2010. And Peyto pays a 3.24% dividend. So they're saying it's facing a do or die situation, although it hasn't gotten as much attention as the Canadian oil industry, it is just as bad. So they think that the Canadian government and natural gas producers will take action to prevent the death of this industry, and the glimmer of this, natural gas stocks will increasingly reflect the good news. And here's the natural gas prices from around like 1990, where it was around 1.59, and then it went up to around 6.7, and then it dropped back down to 1.85, and then it went to 5.8 and dropped down to 4.4, and then it went up to 12.3, and then it dropped down to around 4, and then back up to 13.6 and then dropped down to 3.6. And yeah, so it's just been constantly kind of going down, and then it hit a bottom in 2016 of 1.61, and now it just seems as though it's kind of picking up heat. Yeah, so it's just kind of at bottom prices right now. So you get this doji. So it's hard to say. I mean, with all this stuff going on in the world, there's a chance that the price of natural gas and other commodities can skyrocket. Uh, I know there's all this talk about tariffs. So it's interesting. Basically, with tariffs is I think tariffs will end up creating hyperinflation. So because if things cost more, like for example, if they add up these prices with everything getting shipped, any company that needs to buy things from other countries ends up paying more money. So then it just has to go up. I mean, it doesn't have to, but that makes it harder for companies to prosper. So I don't know. I think just and also there's always whenever there's a lot of tension in global economies, oil and natural gas can really skyrocket. And now, and then if you look at these countries, okay, so some of these countries, like Venezuela and Russia, they have a lot of natural gas. So then there's all these tension in these countries. So what they need to do is they need to cut down on the supply, which maybe they've been doing for a while. I'm not the most advanced person on the subject of natural gas, but I do know that it's been a lot higher, and people need natural gas because that's how they heat people's fireplaces. And I don't know, it's used in a lot of different things, but that's why when the weather gets really hot, then people use more natural gas, and when it gets really cold, people use more natural gas. But when it's kind of like in the normal ranges, it just bottoms out. So I don't know, it'd be interesting. Basically, natural gas is kind of schizophrenic. It can really go up and down, but basically, I mean, it's been down for a while, and it could easily go back up to $5. I mean, I'm not saying for sure it's going to happen, but you look at the chart, it's doing that U curve that it could end up changing and going up a lot. But I mean, different things need to happen. So, anyways, enough analysis on my take on the natural gas industry. We're going to talk about in Canada now. So, when I look at investing.com, I go through the chart, and then I also look at their revenues. I really love investing.com. It's a great resource for me. It makes me a way better investor now. But I mean, at the same time, some of these things, like just because you have the knowledge doesn't mean you can necessarily use it appropriately. Sometimes having too much knowledge is a con, but in the future, moving forward, the more knowledge I have, I think the better I'll be in all my investments. So I'm not just a one-trick pony. I'm not just a cannabis investor. I'm not just a technology investor. You know, I got a broad mind. So if I can be average or above average in every investing space, then that's going to reap me a lot of rewards, I believe. So, anyways, you look at this and they have 5.94 billion in revenue in Canada, and their EPS is 0.76, and they have a 1.1% dividend yield. So, and I also looked into them further. They're buying back a lot of their shares. They're buying not that much, but they've already spent like 660 million, so they bought like 90 million shares. But they have a ton of shares. They got 1.4 billion shares, but for the amount of revenue they make, it's not that big of a deal that they have that many shares, because if the price of natural gas booms, there's a lot of big players in the S&P 500 that have a lot of shares. They have 2, 3, 4 billion shares, and the stock can easily go to 40, 50, 60 bucks as long as the environment is good for the company. So their market cap is 9.86, so that gives them about a price of sales of about 2, and their PE ratio is really low. It's around 9. So that means that for their earnings, they pretty much make $1 billion in profit per year. So that's pretty good. I don't know any cannabis company that's making $1 billion in profits per year. So, so yeah. Again, they're one of the biggest players. Obviously not as big as Royal Dutch Shell, but I think if you're leveraging the Canadian natural gas space, and Canada is a great pick. And while you're waiting for the price of natural gas to go up, you can get 1%, 1.1% in annual dividend yield. So if you had $50,000, they're going to give you $550 in cash every year to hold that stock. So that's pretty cool. And then if the stock starts going up to say like 12, 15, 20, 30, $40, and basically it wouldn't be just because they're making more revenues. It would be because the price of natural gas is going up. So then their profits are going to be going up extremely. So then they're going to be worth a lot more as a company. So it's something to think about. I was listening, to Rick Rule on Kitco, and what he says, the cure for low prices is low prices. So, because if you look at commodities, then the commodity sector, some commodities are really at like 5, 10-year lows. And what that does is it kills off the companies that shouldn't be there. Like they're not operating efficiently to be able to stay in that game. So yeah, that's just kind of how the market works. The biggest players and the most efficient players can stay alive when the commodity prices are terrible, and then those are the same companies that prosper the most when the prices go up a lot. I'm also learning from the cannabis space is it's better to invest into the biggest players, because usually they have the most amount of cash, so they have a float around them, and it's safer. It's safer in the fact that I don't know. It's just more institutions hold the company. It's also it just seems to be the case that more money just gets fueled to the biggest companies. It doesn't have to make any sense. Investing doesn't have to make any sense. It's just the way it seems to work. If you look at the cannabis space, you got all the money going to Cron and Canopy and Tilray and those companies, right? But they're not going to a lot of the small players. A lot of the small players are neglected. So It's just the best and the biggest companies seem to stay alive, and yeah, that's why Encana is a good pick if you are bullish on the future in natural gas, I believe. So yeah. Anyways, we're gonna get into patent expiration, PEY. So we're looking at the 5-year chart, all right? So this company has a great dividend yield. They have 4.15% yield, and their earnings, I guess they just delivered it today. I am not a natural gas expert, so obviously I haven't checked it out, but I might look at it later. What it also says on here is 7.39 PE ratio. It doesn't have a lot of shares out, which is a nice thing. 165 million shares and a market cap of 948 million. So if you're looking at this chart, the 1 year, I want to look at the 1 year. It's at the lowest for the whole year. Peyton is, you look at this, a 1 week candlestick is a doji, which means that it has a great chance of going up from now. So patent expiration could be a very big winner in 2019 and moving forward, that it relies on the natural gas price going up. So if the natural gas price starts going down, this company will keep going down. But if it starts to go up, if you look at the 5 year, it's been as high as 37.69. So that's a lot higher than where it's even been as high as 39.41. So almost $40. So that's, and back here, it was $40 in 2014 when the price of natural gas was much higher. So what was the price back in 2016? 2016. I guess around 6.49. And in 2010, it was about $6 too. So, yeah, I mean, it's pretty incredible. This is about a 20-year chart. So this company has been around for a long time, and they do 20% of the natural gas production in Canada. So it's pretty interesting. They got a 0.78 EPS, which is nice. So yeah. So I mean, you look at this and you could buy this stock at $6. So if you have, let's say $10,000, you invest in this company, you're going to get $415 approximately. Obviously, these dividend yields can change depending on like the price of things. But the way, if the price was what it is right now, if you put $10,000 and you're going to 4.15%, you're going to get $415 back in yields per year. And this price could go back up to $35, almost like an 8 to 9 times bagger. So it's definitely has a lot of upside, but this is it's still risky, right? Because that's depending on oil prices natural gas, I mean, going back up to around $5 to $6, and it's at around 250. So that's but I mean, even if it stays the way it is, you're still going to get a 4.15% as long as it stays in business and the company has enough cash to keep going, then it'll stay in business. So in 2018, it went as high as $12. So I mean, even if it went to $12, that's a 100% gain. So I mean, that's where it's at right now, it's at very low levels. Yeah, let's see. 559, 553. Yeah, so it's 22 cents more than the lowest it's been in its existence, pretty much. Like if you go besides like before, back in 2000, before pretty much 2003, which is like 16 years, this is the lowest it's been. Yeah, in 16 years, this is the lowest it's been. So I don't know. It's interesting. I mean, it could go lower, but at the same time, it could also go a lot higher. And I have to look into the company more, but I think you should look into this company. And if you know more about these companies as well, leave a comment down below and let me know what you think about these companies. Even if you don't know much and you're just learning from me here, let me know what you think about these companies as well. I'd love to hear what you have to say about these companies so I can learn from your perspective as well. So, and TMX Money, the thing with these mining companies is their book value is super low. So it doesn't mean that it can just naturally go up because there's other forces at bay because natural gas is out of favor. So it could just keep going down. But the fact that it's should be worth about $10 per share because it's 0.564 price to book, that gives it ability to get to a $2 billion market cap. And yeah, I don't know. I think there's definitely a lot of upside with Peyton and Canna. Definitely look into them, I think, if you're interested in the natural gas space. So this company is, what is it? New Vista Energy. So they did 539 million and they had 0.64 EPS and they don't have a dividend yield. So that's why these two picks in Canna and Peyton, I put them ahead in these companies that I'm looking into. And their PE ratio is better than the other companies. So they have a 5.75 PE ratio. So they don't have that many shares, 225 million. That's a decent sustainable level of share count. It's just basically if they were to make $1 billion or $2 billion and the price of natural gas was to go up, then they could go back to like $8-9 and they're $3.78. So, and they were even as high as like $12 in 2014. So, I mean, it could just stay around that level and you're not going to earn a dividend yield. So that's why I kind of picked the Encana and the Peyton ahead of this company, but they have a lower PE ratio. So it's interesting. Companies like to give out dividend yields to kind of keep investors staying in their positions and not sell. So companies can be less like on an intrinsic value, they can be lower on an intrinsic value, but the price can be a lot higher just because the company gives out a dividend yield. And then it gets kind of a premium because people love the fact that they're getting money while they're waiting for their investment to grow. So there's investors that just do dividend growth stocks. So they'll be invested in these stocks and they'll get the dividends. And so they're growing their portfolio and it's giving out a dividend. So even if the stocks go down, they're still getting money. So that's something to think about. anyways, that's pretty much what I wanted to summarize about the natural gas space. I hope you learned a lot about this industry and the problems in the industry and the upside potential and these companies that I'm overviewing and about the natural gas price and where it's been a lot higher and it's a lot lower now and my perspective. So please give me a thumbs up. I appreciate it. And leave a comment down below and subscribe for future content. And yeah, until next time, peace.